Okay. So, yesterday evening, I sat down to watch a show, just to relax, like a normal person. Opened my laptop, and accidentally landed on the news. Iran, tension, oil, markets. And that was it. Netflix was dead. I was dead. 3 in the morning, I'm drawing charts on napkins. My wife walks into the kitchen. Again? Yes, again. Because when something big starts happening in the world, the financier inside me just cannot switch off. It's like a fire alarm, except instead of fire, geopolitics. And instead of panic, Excel spreadsheets. So today we are breaking down the Iran war through the eyes of someone who cares more about your portfolio than CNN headlines. Buckle up. This is going to be interesting. Let's start with the basics, because most people hear Iran and think, well, that's far away, not my problem. Dear friend, it is your problem. Iran is not just some country on a map that you skipped in geography class. Iran sits on the 4th largest proven oil reserves in the world. And then there is the Strait of Hormuz, a narrow bottleneck through which roughly 20% of the world's oil passes. Think of it this way. All the world's oil supply is one giant pipeline, and the Strait of Hormuz is the tap. And right now, someone just walked up to that tap with a wrench. Now you understand why I don't sleep at night. The first and most obvious winner of any escalation in the region, oil. The moment tension rises, prices go up. This is not theory, this is history. 2019, the attack on Saudi Aramco facilities. Oil jumped 15% in a single day. One attack, one day, plus 15%. So who wins? Everyone holding oil assets, but only those who can actually sell it. ExxonMobil, Chevron, Shell, BP. These guys are watching the news right now with a very calm expression. A little too calm, because their oil moves through the Atlantic. The Strait of Hormuz does not affect them. And now, the biggest plot twist of this whole story, Saudi Arabia. You would think oil gets more expensive, they sell oil. Profit, right? No, because there is nowhere to sell it. 75% of Saudi oil exports move through the Strait of Hormuz. The strait is closed. Tankers are sitting still. Storage tanks are full. Pipelines are running at maximum capacity and still cannot keep up. Picture this. You own a warehouse packed with iPhones. The price of iPhones just tripled, but the only exit from the warehouse is locked, and the security guard out front is shooting drones. That is Saudi Arabia right now. The oil is there, the price is high. The money exists on paper. In reality, zero. And that is not even the whole story. Iran is launching drone attacks on American bases across the region, in the UAE, Qatar, Bahrain. The entire region has become a military risk zone. Dubai, which spent years building itself into the Singapore of the Middle East, a financial hub, a tourism destination, is now hosting military briefings instead of tourists. Tourism, zero. Investment, frozen. International conferences, postponed. The neighbor started a fire, and now the whole street is burning. Now the losers. And there are more of them. Europe. Oh, poor Europe. After 2022, Europe already pulled itself off Russian oil, with enormous pain, enormous energy bills, and an enormous number of sweaters worn indoors that winter. And now, energy prices rising again? Picture someone who just quit smoking. 2 years clean, real effort, nicotine patches, arguments with the family. They made it, good for them. And then stress, massive existential stress. That is Europe right now. Germany, an industrial giant that needs cheap energy like oxygen, is back to counting losses. France is nervously smoking by the window. Italy is making espresso and staring at the ceiling. And then there are the airlines. Oh God, the airlines. Jet fuel is 20 to 30% of their operating costs. When oil goes up, they either raise ticket prices or lose money. Take a guess which one they will choose. That is right. Your next flight to Europe will cost about as much as a used car. Now, the most interesting player, the United States. The USA is a paradox in this story. On one hand, they are the world's largest oil producer, and their oil moves through the Atlantic. Rising prices are not exactly bad for them. The Texas oil guys are watching the map of the Middle East right now with an interest they are not even trying to hide. But on the other hand, the American consumer. When gas gets expensive, Americans get angry. When Americans get angry, they vote against whoever is in power. This is a law of nature. It has been tested many times. Remember 2022? Biden flew to the Saudis, hat in hand, asking them to pump more oil, to bring gas prices down before the election. Politics and oil, one toxic romance, but they cannot quit each other. And now, my favorite player in this whole game, China. China has been importing enormous amounts of Iranian oil for years, bypassing sanctions through gray schemes through third countries. This is no secret. Everyone just pretends not to notice. As the situation escalates, China finds itself in a very interesting position. On one hand, more expensive oil hurts Chinese industry too. On the other hand, a Middle East consumed by conflict keeps the United States occupied. And the United States occupied with Iran is spending less time thinking about Taiwan. I'm not saying China wants this. I'm just saying that Chinese strategists are very smart people with a very long planning horizon. While we think in quarters, they think in decades. And that is a little unsettling. Okay, let us talk about the thing people usually only whisper about. Defense companies. Lockheed Martin, Raytheon, Northrop Grumman, BAE Systems. Every single time tension rises in the world, their stock goes up. This is not a conspiracy theory. This is just business. Countries buy more weapons, contracts grow, profits grow, shareholders are happy. I am not saying this is right. I am saying this is the reality of the market. And if you hold a defense sector ETF, you are probably staring at your portfolio right now with very mixed feelings. Because money is money, and conscience is a separate conversation. And now, what is happening right now? Iran closed the Strait of Hormuz. Not with a fleet, not with mines, just a few well-placed strikes on tankers. And then something interesting happened. Insurance companies said, no. No insurance, no ship financing. No financing, no crew. No crew, the ship goes nowhere. Lloyd's of London closed the Strait of Hormuz more effectively than the Iranian Navy. This is an inflationary shock. Across the entire world, food gets more expensive because transport gets more expensive. Transport gets more expensive because fuel. Fuel gets more expensive because oil. It is one giant economic domino party, and nobody is having fun. The classic question in any crisis, where do you put your money? Gold, the old reliable safe harbor. When geopolitical nerves get frayed, it always goes up. Central banks around the world have been buying gold like crazy for the past 2 years. That is not a coincidence. The dollar, also a safe haven. Paradoxically, even when the problem starts around American interests, investors still run to the dollar, because everything else is worse. Bitcoin. This one is complicated. Crypto enthusiasts are shouting, Bitcoin is digital gold. It will go up. Sometimes, yes. Sometimes, Bitcoin falls along with everything else, because investors in panic mode sell off risky assets first. Bitcoin in a crisis is like a cat in a stressful situation. Unpredictable. Might hide under the bed. Might suddenly attack your ankle. You know what? I have to share a story. A few months ago, I was riding in an Uber. The driver, an older man, originally from Iran, had been living abroad for about 20 years. We started talking, and he tells me, completely confident, that oil is going to go up soon because something is starting again over there. I, a financier with degrees, a Bloomberg terminal, and subscriptions to 3 separate research publications, nodded politely and thought, sure, buddy. Oil went up. My Uber driver turned out to be more accurate than half the analysts on Wall Street. Sometimes lived experience is worth more than a CFA. Okay, let us bring it all together. Oil gets expensive. The winners are American, Norwegian, and Canadian producers. The ones whose oil does not depend on the Strait of Hormuz. Oil gets expensive but cannot be sold. Saudi Arabia, the UAE, Qatar are suffering. Full tanks, blocked exits, zero tourism. Tension rises, defense companies, gold, and the dollar win. Uncertainty, everybody loses, because markets hate uncertainty more than they hate bad news. So what do? Diversification. Not the sexiest advice, but it works. Oil assets outside the Middle East? Right now, especially relevant. A little gold or gold ETFs, a classic for a reason. Panic selling everything? Never, never do that. Markets survived the Suez Crisis, the Iranian Revolution, the Gulf War, and they came out ahead every single time. They will survive this too. And before I go, my wish for you. The world right now is full of noise, full of headlines, full of fear. Do not make financial decisions based on emotion. Not when you are scared and not when you are greedy. Think cold, think long-term. And remember, the greatest investors in history were not the ones who predicted every crisis. They were the ones who did not lose their heads during every crisis. Be those people. If this video was useful, hit the like button. It helps the channel more than you think. If you want more breakdowns like this, subscribe. I cover big world events through a financial lens. No panic, no politics, maximum honesty. Thank you for being here. Take care of yourselves, take care of your portfolios, and please, sometimes, just watch Netflix. See you next time. Bye.